Hello, everybody. Welcome to the Saturday live stream. No way to say it. There are some massively high Bitcoin fees, and we're going to talk about why that is and why they are like that and just how high they are and potentially could actually be. So it really all comes down to a very simple thing, which is ordinals and runes. And essentially what it is NFTs on the Bitcoin blockchain. Now, people have talked about this for quite some time. It's a very simple type of thing. And they've also has fungible tokens, which will be through runes and things like that. But we can see that, like, for even me, like, I was just dabbling into it, trying to figure out what it actually is. I bought wizard tokens, which are BRC20. And then also I purchased a rune stone about a week and a half ago or so. And it's not a big deal. It's just something that purchased on the Bitcoin blockchain to make these things more usable. But because of these things that people are doing, we're all doing, we're seeing a massive spike. And of course, some people will say, well, this is a massive spike. This isn't a big deal. This isn't, really that bad for these transaction fees to be $60 or $80 or $160 or $300. It doesn't matter because Bitcoin can get all over that. Or it can actually get over that. And I look at that and I wonder to myself, is this what the future of finance is supposed to look like? Are we supposed to pay these types of fees as we continually evolve into Bitcoin? Or is there a way to possibly solve all these issues? So if we just take a look at the fees themselves on this channel, me specifically, I've been a very big fan of Ethereum. Let's be honest. Ethereum layer 1 fees are ridiculous. And we can just see here, this is from bitinfocharts.com. And you can see that in blue are Bitcoin fees. And in red are the Ethereum fees. We know that, of course, Ethereum has just been, massively high. It's just how it is. And of course, over here in March, we had a big peak of Ethereum fees of $30 and Bitcoin transaction fees of $16, which seems actually quite high. And this is exactly what we were worried about. This is what we were worried about, going into the halving. This is what we were worried about going into bull markets. And if you think these fees are high, imagine how high the fees will be for Bitcoin and Ethereum going into the next bull market. I shudder to think how high it can actually be. But I think there's a resolution to it. We'll talk about that in a bit. So now we're coming over here. Today is the 20th. Happy 420. Hey, I just realized that. 420. Huh. Congratulations, we made it. Happy 420 to everybody, especially in those qualified countries and states to really enjoy 420. Good for you guys. But we can see that on 419, the Bitcoin average transaction fee was $18 and Ethereum average was $4. So imagine that. Ethereum, again, is getting trounced in the transaction department by Bitcoin, which is kind of crazy. And then, of course, if we take a look at it and we want to verify these things, this was a message put out by Udi. Udi is one of the leads over there for Ordinals, and he said, hey, attention all, this was April 13th. This was like a week ago. And he said, attention laser eyes, we're declaring a temporary ceasefire and will allow you to broadcast your coffee transactions. It's pretty funny. For 1 week until the halving. But after that, when we start to mint runes and ordinals, and actually he said ordinals, I didn't say about runes. He goes, we're going to take over and hopefully we don't crash Bitcoin. And I was taking a look at it and I just posted this, today. And I was just asking people, like, what have you seen as far as the transaction fees? And this is from Pat Am Dreamer. And he put this out and I was blown away. I couldn't believe it was this high. He goes, yeah, they've gone down, but they're still 3x the normal. And of course, these are going to fluctuate. And depending on how fast you actually want to put things out as far as moving your Bitcoin around the globe, low priority is $127, medium and $153, and high 3 hours ago, again, $173. Also, we take a look at bit info fees. We can see that it's not really that bad as time has gone on. Now it looks like if you have if you want to move anything around 20 minutes, it's $100. An hour, 82. If you want to wait 6 or 24 hours, that's reasonable. But if we take a look at mempool, this is the one that I like. It has been fluctuating massively. I've seen high priority transaction fees, which, again, 20 minutes, come on, which is nice. Let's be honest. It's way better than a bank that's out there for doing wire transfers, 2 to 3 business days. Get out of here. But yeah, of course, 10, 20 minutes is pretty nice. But I've seen everything from this price right here, $25, all the way up to $278. It was just insane. And that's just how it is, of course, because the blockchain is really getting put under duress by runes and ordinals and, of course, minting and transcription. So if we take a look at that, I was just thinking to myself, well, these are just what I see. This is the data that comes in, but why don't I test it myself? So I just did a quick test transaction to see what the fees are. And yeah, it was true. I just did this like 20 or 30 minutes ago. And the fee itself is $65.27. Just to send a minuscule amount of Bitcoin just around. And that's just how it is. So the question I have for everybody is twofold. First of all, is this the future of finance? Is this the new normal of what we're going to see? Because I hate to tell it to you, everybody, ordinals and runes aren't going away. Now, we did an actual video of runes itself. And it was a quick video, it was like 5 minutes or so. And it was supposed to reduce the workload of the Bitcoin miners and reduce the transactional cost. And I linked this video in the description. Of course, you can also just search for Digital Asset News Runes. It'll come up. So I was like, well, this would be great. But unfortunately, it's not playing out to be that way as everything is being played around on the blockchain. So again, if we're thinking about it, the question is this the future? And is this what the white paper from Satoshi Nakamoto in 2009, is this what we're supposed to be doing? And it says right here, Bitcoin, a peer-to-peer electronic cash system. Is this how we do things? Is this how we're going to move things around? I'm not saying that runes and ordinals are an albatross and should be stopped, because that's not my position. My position is we need to figure out a way to make this a little bit more cost effective. And for that, it's going to be growing pains. And those growing pains are also going to, unfortunately, get into potentially the price of Bitcoin as we start to see these fees go up, because that's what's happening. So lastly, I will say like this, and I've said this before, there has been narratives right now being floated around, a lot of those being quite easy to pick up. Web3 gaming, decentralized exchanges, especially what's going on with centralized exchanges, and then the DePIN narrative, decentralized physical infrastructure network. And I think that'll be the big play coming into the next bull run. But I haven't always said, but I've taken a look and all the things that are going on with Bitcoin and of course with Ethereum and some other actual layer ones. And that's why I think layer twos are going to be the big new thing for this bull run. Imagine having a layer 2 or a side chain for Bitcoin to do all these things to reduce the actual transactional cost and not congest the network so much, because it's not just the fees that are going up. I guarantee you, if you try to send some Bitcoin right now, it's going to take some time. There's a great website, L2.watch, and there's 8 or 9 different Bitcoin side chains and L2s either in development or in pre-testnet right now. If you want to see of what could potentially be the next big thing, definitely take a look at that. And that's where we're at. That's where we're at right now. So let me know what your thoughts are in the comments section. And then lastly, I'll just say that, I just did a quick little poll to see, who's been paying what. And Dan Gambardello came out and said that he paid I think this might be a joke, $300 on one transaction yesterday. I couldn't believe it. Rambo Doom, Big E, $89. What else have people said? Oh, then someone said, hey, does Bitcoin have a website that shows gas fees? Yeah, there's a great website we took a look at, mempool.space. I'll link in the description so you could find that. And everybody says, hey, that's how it goes for ordinals. That's how it goes for, maybe this is for runes. And we'll go from there. Anyhow, let me know what you think what's going to happen. But I still think layer 2s and sidechains are potentially the future. And then moving from that into just a little price action, we did a talk yesterday, and we talked about miners and what the halving is. And I talked quickly about, well, not real quickly, but about dynamic dollar cost averaging. Go check that video out from yesterday. And one thing if you're not familiar with this is where you use the time and risk bands instead of like buying all the way through in dollar cost averaging, which is what I usually do, quite honestly. I think there's a better way. It's called dollar cost averaging, but dynamic. And when you get in these risk bands, this is when you start to load up, or as the price goes down, which, let's be honest, there's a black swan event around every corner. I don't know what's going to happen in the Middle East. I don't know what's going to happen with Jerome Powell. I don't know what's going to happen with the Treasury. I don't know if it's going to be quantitative easing or quantitative tightening. I don't know. I don't think anybody really knows. So if you think everything goes in a straight line, we all know that's ridiculous. So this is why, investing or dollar cost averaging, this is what I'm following a lot more stringently, which is as the price goes down into these risk bands, this is when I start to pick up more. And then like the example would be right now, the risk band for Bitcoin is in 0.6 to 0.7, which is a little bit high. But as it goes down and you start to get into these lower risk bands, this is when you start to buy. And then if it goes into lower risk band, meaning that the price is going down for whatever happens, whatever black swan event happens, you double up, you quadruple up, you sextuple up, and you go from there. But one of the things that I didn't show yesterday because I didn't go through the necessary steps, I'm sorry, I apologize, is I want to take a look at what if you had done that dollar cost average in these risk bands, and you'd done that in a dynamic way, and you just stopped accumulating after 0.69, and you just said, I'm not going to buy anymore, but I'm going to dynamically invest like we just took a look here. And I want to show you how much better it is. Check this out. So if you did a DCA equal amount, you put $10 a day. You started on, I just picked June 1st, 2022. I mean, we could have done January 1st, but whatever. I just picked an arbitrary day. You can do this on Ben's website. This part's free. And I said, okay, $10 of Bitcoin. And I end on, yesterday. You can see that for Bitcoin, I invested roughly $7,000. And I got back 16,617. That's a 141% increase. But if I would have done the dynamic DCA, as far as the percentage goes, here I'm up 141%. Dynamic DCA, I'm up 203%. Just for stopping when it goes above 0.69. And then I quadruple up when the price goes lower. I could have done that. And it's like the easiest thing of all time. But what's more interesting, take Ethereum, because you can do this on, you can choose different assets. Same thing. If I did the same thing with Ethereum, I put in $6,890. I'm up 80%, 12 grand. Not bad. I put a dynamic DCA, I'm up 118%. And now let's go down here. How about if we did Cardano, which is worst performer, right? One of the worst performers. If I would have DCA'd, I've been up a whopping 27%. Woo! Dynamic DCA, 44. I would have doubled almost doubled, just by not buying at certain points and then doubling up. How about Polkadot? DCA equal amounts, I'm up 14%. Now I'm up 20%. Polkadot's really a laggard. It really is. How about Avalanche? DCA equal amounts, 108%. Dynamic DCA, 150%. So again, I'm just showing you just how this works out with dynamic DCA. I'm going to try to follow that a little bit more stringently because I can just by doing something very simple, I can increase my ROI. I don't have to really do anything. And then as a reminder, if you sign up for the website, like I said, like this part here, the DCA part, that's free. But for the dynamic DCA, of course, that's the paid part. Ben's, I think, still having the sale that's going on, not for sure. But there's a link in the description. You get 10% off the first month. And if you do that, turn on these notifications. You download the app and it comes in and goes, hey, the Bitcoin risk is at blah, blah, blah. And you're like, oh, maybe I should either not buy or buy some more. Anyhow, just want to throw that in there so everybody knows. But that's it for that. Again, this is Into the Cryptoverse. Links in the description. Ben's website, if people know. It's like the first link you're going to see after I posted the link to the Bitcoin white paper. And that is it for today. So look, just want to make this quick on a Saturday. Beautiful day here in Puerto Rico. Go enjoy the day.